Hi y'all. I wanted to sit down with y'all today and speak about something that not everyone knows about, and this would be how a mortgage payment is broken down. I live in Texas, and in Texas, I feel like the way taxes work here is a lot different than other states because I get a lot of out-of-state clients that don't know how high our tax rate actually is here. When you go to Zillow and Realtor.com and HAR.com is our local website for the MLS, the database for looking for homes, they will give you a mortgage payment breakdown, so like a calculator and things like that, that will estimate your monthly mortgage payment. And I'll do another video on this, but Zillow, Trulia, Homes, what else? HAR, every single website gives you a different estimate. So obviously they're not all correct because there's this huge range of numbers from, $400 to $200 difference, and that's a lot of money over a year. So I'm going to go over I have notes. I'm going to go over the mortgage payment breakdown. When you are paying your monthly payment every single month, you need to keep in mind that this doesn't just cover your loan. Most likely you're going to be putting money into escrow. So you have your principal, you have your interest, if you own less than 20% of your home, then you owe something called PMI, private mortgage insurance, and this can range from $150 to $400 depending on your price range, and then obviously it goes up from there. But my point is, it's not just a small sum of money, it's a decent chunk of money. And then you have your homeowner's insurance, which goes into your mortgage payment. And then if you're in the 100-year floodplain, then you do pay flood insurance, and then you have the option to pay it if you're in the 200-year. And then you have taxes. Now I'm going to go over the tax breakdown, but do keep in mind this is without exemptions. So if you're a senior, a VA, and then homestead, if you occupy the home, then you're going to get a tax break. But you don't get the tax break right away, so I'm just going to give you the initial numbers. And then I also want to discuss what's really important to keep in mind. Obviously, the better your credit score, the better interest rate you're going to get. And I was doing some math earlier today between 4% and 4.25%, and it's like a $150 swing on a $350,000 to $400,000 house. So it does make a difference. Every point counts. And then when you're paying taxes on a home, you're paying the taxes on the assessed tax value by the county. So even though your house may be a $300,000 house, maybe you purchase a $300,000 house, but maybe the county has appraised it at $350,000. So those calculators that you see with the estimate will not be accurate because they're not always considering the assessed value. So we can do that math. And I do that for my clients. I break down their monthly payment estimate. And then if you put down 20%, then you will not have that PMI. And I did the math on we're doing $300,000 houses with our math. You will save $62,000 over the life of your loan if you put down 20% to avoid that PMI. Now, PMI is not always applied. So if you have a VA loan, you do not have to pay PMI, which is really awesome. And then if you're totally disabled, you do not have to pay the majority of your taxes. So you get like a huge tax break. And I apologize if I say that incorrectly, but I do know that you get a huge tax break. When you pay your homeowner's insurance, it's going to be about 1% to 1/4% of the value of your house. And then that's your premium, so we're going to divide that by 12. So I picked two houses. I picked two neighborhoods I'm really familiar with. I live in Memorial Northwest, and I know we have a really low tax rate here, between 2.4 and 2.7, depending on what section you live in. And then I picked a house built in Cinco Ranch in 2008. So both houses are going to be $300,000. And we'll start with the Cinco Ranch house. And I'm going to do the math on a piece of paper for y'all. So Cinco Ranch house, $300,000. You are going to put down, let's say 5%. And so your loan value, the price of your loan is going to be $285,000. You are going to pay 3.1426 and some change on your tax rate. And this home is appraised for $303,000 and some change. And so I'm going to do the math. So your principal and interest, we're going to use a 4% interest rate, which 4% is for a better credit score. Maybe you go down a little bit, a higher credit score, and a little bit up for not as good of a credit score. But 4% I thought was a good even number since it will go both directions. So your principal and interest, when you do the math, is $1,361. Your PMI, there's a calculator you can do online. The PMI is $171. And then your taxes are going to be $842 a month. Again, I did that math by taking the yearly payment and dividing it by 12. And then I estimated your insurance to be about $250. So when you do the math, this monthly payment without exemptions is going to be $2,624. So $2,624. So this is with 5% down. The taxes for 2015, $10,104. So this is a house that's built in Cinco Ranch, $300,000 house. So your monthly payment will be $2,624. Now I'm going to do the house in Memorial Northwest, and these are both houses that are on the market right now. I did not write down the address, but if for any reason you're interested, I could pull it up for you. The Memorial Northwest. So the Cinco Ranch house was built in 2008. The Memorial Northwest house is built in 1968. So again, this house is $300,000. But this time it's tax assessed for only $259,498. In 2016, this person paid, not this person, but without exemptions, they would have paid $6,475. So again, we're going to divide that by 12. And the tax rate is only 2.49515. And if you're looking at newer houses, you're going to be in the 3% range, 3 and up. So do keep that in mind. If you're looking at a newer house, the possibility your taxes are going to be a lot higher than a more established neighborhood because of the mud and schools and things like that. So this is going to be same for the P&I, principal and interest, $1,361, and then your PMI is going to be the same, $171. And your taxes is where this changes. Your taxes are only $540, and then your insurance is probably still about the same, $250. And then I do recommend shopping around. I personally use Corey at Goosehead, and he's always done a really good job for me. He lowered one house of ours by $200 a month, which was huge, and he lowered another house by like $30, but the payment wasn't that high in the first place. So when I add up these numbers, I come to $23.22 a month. It's kind of hard to read. So I will show you this comparison. And so this is, a $302 difference just because we looked at the tax rate and the appraised value. So why is this important? So 1, you do need to know how your mortgage payment breaks down. 2, this is important because you need to know what to focus on. And the reason why I think this is most important of all is because when you're looking at a house, you should not have a price range of $260 to $270. You should have a price range of how much you want to spend every single month. Because you could be looking in different neighborhoods and you see a $300 swing right there, and sometimes it's even more. The Cinco Ranch house ended up being an older house, but if you're looking at a newer house, you could be spending, say up in the Woodlands, you could be spending $1,000 to $1,200 a month in taxes and another way to look at this is, in Cinco Ranch, you could afford maybe a $300,000 house. In the Woodlands, maybe you can only afford $280,000. In a Memorial Northwest, you could probably afford $400,000, or I'm just throwing numbers out there. So it's really important to watch your mortgage breakdown. But yeah, that's all I have for you today. If you have any questions, this has been Jordan Shalacy, and I'll talk to you later. Bye.